We will now move on to the next problem in AS12. On 14X1, ABC Limited received a government grant of 300 lakhs for the acquisition of a machinery costing 1500 lakhs. The grant was credited to the cost of the asset. So the net cost is going to be 1200 lakhs. How? 1500 minus 300. The life of the machinery is 5 years. The machinery is depreciated at 20% on the WDV basis. It is not SLM, it is WDV basis. The company had to refund the grant in May X4 due to the non-fulfillment of certain conditions. So when the machine was bought, 14X1, so X1, X2, X2, X3, X3, X4, after 3 years, beginning of the 4th year, so it's May X4, that's X4, X5, the grant is getting refunded. How would you deal with the refund of the grant in the books of ABC Limited, assuming that the company did not charge any depreciation for the year X4? So the question is very clear. How would you deal with the refund of the grant in the books of ABC Limited? When you receive the grant was shown as a deduction from the cost of the asset. So now we should add it back. That's all. But we should show the computation. What will be the value of the asset on which the future depreciation to be provided from X4 onwards? Now, if we go back to the asset, according to para 21 of AS12, accounting for government grants, the amount refundable in respect of the grant which is related to a specific fixed asset should be recorded by increasing the book value of the asset or by reducing the deferred income balance as appropriate by the amount refundable. Where the book value is increased, depreciation on the revised book value should be provided prospectively over the residual useful life of the asset. So in this case, the company has actually reduced the grant from the value of fixed asset. So when we are refunding the grant, we need to add it back to the cost of the fixed asset. So let's start with 14X1. When the asset was first acquired, machinery was acquired, 1500 lakhs is the actual acquisition cost. But we also received a grant of 300. So if I knock off that, I'll get the remaining value is going to be, or the actual acquisition cost is going to be 1200 lakhs. First year depreciation for X1, X2, 20% WDV. So 1200 into 20%, that will give you 240 lakhs. 1200 into 20%, that will be 240 lakhs. Right? 1200 into 20%, that will be 240 lakhs. Now, the balance of the asset is going to be 960. How? 1200 minus 240 is going to be 960. Now, if you calculate 20% WDV on 960, so it is 960 into 20%, that is going to be 192. So the balance asset value is going to be 768. For X3, X4, calculate another 20%. So 768 into 20%, that will give you 153.6. So the book value of the machine as of 14X4, 1st April X4 is 614.4. Now you add back the value of the grant as 300, you get 914.4. That is the revised book value, 914.4. So from X4 onwards, X4, X5 onwards, depreciation should be provided on the revised book value of 914.4. Okay, it's a very simple problem. Make a note of this. Thank you.